Well, let's see if autos can become components of this rally that Biju Samuel believes can happen in the markets, because there seems to be some problem there, because there seems to be no end to the woes of the space. Latest data released by the Federation of Automobile Dealers Association suggests that weak consumer demand has led to a further surge in inventory. Degrowth in two-wheeler sales have increased further, while CV sales are also witnessing a weakness in demand. Let's discuss all of this with Ashish Kale. He's the president of FADA, joins us right now. Ashish, good having you. Thanks so much for joining in. The last couple of times that we spoke to FADA, the conversations were very candid. I would presume the same right now as well. It is not looking all that great.
Thank you for having me here. No, it is not. As you can see from the numbers, we are going through a difficult phase currently as far as auto retails is concerned.
So as we said in our lead into this conversation as well, and let's start off with each of these pockets one by one. The belief largely has been that from July onwards till December, CV sales will come back in the run-up to the BS6 norms. But the current data doesn't seem to be suggesting any kind of a pickup or even a glimpse of a pickup, I presume.
So CV sales, if you see, are actually still in the positive. Definitely the high growth that was happening till December has started tapering. We are seeing some softening of demand in that, but currently it still remains positive. As far as BS6 is concerned, that's still 1 year out. It gets implemented on 1st April 2020. So I really don't see BS6 demand coming into place so soon. It will probably be, as you rightly said, June or July onwards in the coming year.
So what is right now the biggest concern? Is it the inventory surge, and how much has it gone up by the last time we spoke?
So the biggest concern is demand itself, no doubt about it, that from April till August, the entire auto industry, almost all the verticals were growing at a very healthy pace. September, starting with the insurance cost going up, we had many negative triggers in the market, because of which we saw a slowdown in growth, and finally now heading towards a degrowth. In terms of two-wheelers, the growth has been higher. And passenger vehicles, we saw an uptick in January. As we had reported in January, the discounts were extended from December into January. And we saw some good demand happening in January. But February, we've seen almost all the sectors going into the negative.
Okay. So that's one aspect. And, you know, frankly, if you look at the Feb registrations data as well, two-wheelers down about 7.97%, three-wheelers down 10%, CVs down 7%. Passenger vehicles 8.25%. Is there?
Yeah.
I mean, what happens here now? Is it if indeed rates come down? We've had one rate cut that has happened. Almost everybody after the numbers that have come out speak about one more rate cut in the offing. Can that give some bit of impetus? That is part one. And part two of my question: a lot of people believe that the NBFC stress is one principal reason why financing is not available, and that is impacting too. Are we seeing that easing off, or is that problem still acute?
Okay, so I'll also answer the second part of the question which was asked earlier. The concern for dealers is definitely the high inventory which has piled up, apart from the slowing demand, which is a concern for the entire industry. Now, coming back to your question in terms of NBFC liquidity issue, yes, we have seen some easing in the liquidity post December. I think RBI announcing a 0.25% cut also was a positive, although it didn't reflect into rates going down as much, but it's an indication to the overall banking sector, NBFC sector, that easing has started. But yes, liquidity still remains a concern. There are consumers who are unable to get finance due to the cautious approach of financial institutions, which contributes to the lower growth as we are experiencing, along with other factors. In terms of triggers, see, currently the way the consumer sentiment is weak, we can look at 2-3 triggers which could possibly revive the growth. One thing I'd like to mention here is that the retail sales, as much as they have fallen, the inquiry level has not fallen to that percentage. So the dealer community, overall auto industry remains hopeful that we can bounce back if the positive triggers are there in the market. 2-3 positive triggers. I think a stable government after the elections definitely will be a major positive trigger looking at the future. Also, if there is further easing from the RBI in terms of liquidity as well as interest rates, I'm sure that will act as a definite positive trigger. Immediately, any RBI action towards easing affects the auto market. And the third could be, although it's a little way out, but it could also be positive rainfall across the country as is being predicted today. Any one of these triggers, I think, will help us revive demand is our expectation. But currently, we are facing headwinds.
Right. Comment on what is expected during the monsoons, particularly for, some of these truck makers. We've got an initial forecast from the IMD as well. What's it looking like, particularly from that aspect?
So too early to completely go by the forecast, I think. But as of now, rains are being forecast as normal. Being an agricultural economy that India is, definitely a good rainfall across the nation affects us very positively. And the first beneficiary sector is the auto sector. In terms of trucks, obviously with larger goods movement during the agriculture, with higher agricultural produce, it does affect truck demand or the overall demand for trucks. But I think in this new financial year, BS6 would be a key factor in terms of determining CV demand. We have to see how it plays out. Probably July onwards, we'll actually come to know how the implementation of BS6, the price differential, and therefore how the demand for commercial vehicles pans out.
Okay, just one last question before we let you go. Now
Sure.
That you're talking about, the inventory pile-up that's happening, even from the next 1 or 2 months perspective, while the last few months have not shown any change, in fact, just a worsening of the number of days of inventories that are being stocked up, is that going to show you a slightly more grimmer picture? Because now dealers are going to start to, try and sell off the inventory that's already lying with them before they start placing new orders. So new orders will take even longer to come about?
There was a correction that happened in inventory towards end of December and part of January for the passenger vehicle and commercial vehicle segment. But nobody expected February sales to be this low. So yes, inventory pile-up has happened, and it is a worrying fact for the dealers. It adds to our interest burdens, our overall working capital burden, and as I said, liquidity anyways has a tight environment right now. So definitely dealers will be looking at reducing wholesale supplies than what they sell. Now March retails, how they pan out, and therefore how do we look at wholesale sales is something which has to be seen. But I'm sure all the OEMs have also taken note of the weak consumer sentiment. November, December was an aberration, so we expected demand to come back. But now it can be seen that it is a weak consumer sentiment that is there in the market today. So I'm sure OEMs also have planned the production that way, and we might see a regulation in wholesale supplies to dealers, because currently the inventory levels are quite high.
Okay, I think that seems to be the key burning issue. Thrice on this conversation now, Ashish has referred to the inventory levels. So clearly that is the burning issue and doesn't seem to be going away. Absolutely. No, Ashish, I'm just trying to get the key assessment out of this conversation.
See, already, as we have mentioned in our press note, operational costs for dealers have risen in the past 1.5 years. And if we are prolonged inventory levels like this is absolutely unsustainable. So definitely we have to reduce inventory and regulate our costs till we get back to good times. As we've said, this is a temporary dip. We expect the India growth story to come back, and we hope good times return soon.
Okay, one final question. Do you think that such high inventory levels lead to lower primary sales over the next couple of months? Would that be a fair assessment?
Primary sales meaning
from the
OEM
to the dealership.
Obviously. How else do we reduce inventory?
Yeah, precisely.
So, I mean, if I'm buying as much as I'm selling, there's no reduction in inventory. So definitely, as we've already mentioned, that dealers in the next 2 months will have to. It's not possible to come down within a month. OEMs also have their production plans, so we have to, in conjunction with them, we have to ensure that wholesale supplies are lower than what we sell. Then only inventory will come down. So definitely, primary sales will be lower than what we actually sell to the consumer.
Leave it at that. Ashish, thanks much for taking the time out, and all the best with the inventory clearance. Hopefully it happens sooner rather than later. Well, if it's not...
Thank you very much. The best wishes are all needed. Thank you.
Okay.